Well, welcome to our latest webinar. Hopefully everyone can hear me. As this is a webinar format on Zoom, I won't be able to hear what anyone else is saying, but you'll notice at the bottom there's a Q&A box. So we'll use that for the Q&A. If there's anything you need to highlight to me, just mention it in that little box, and I'll keep an eye on those comments. So as I said, welcome. The webinar is only going to go for half an hour, won't go for long at all. Basically, there's two sections. So the first bit is where I'll discuss a few key points in terms of the macro environment, what we're seeing out there, where we think the opportunities are, what you need to look for. And I'll highlight some recent trades as well in the Dynamic Investor Report, what we've been trading for clients. And a couple of stocks that we're buying right now and that we think look really good. And then we'll get to the Q&A, which is the bit that everybody enjoys. So that would be basically what you need to do is just putting your stock code into the Q&A box. I'll see it. I'll pull up the charts and basically go through what I think's happening on the chart there. So just like those weekly videos I do, but we'll do that in real time. So it's just after 5. Hopefully everyone's here now. Just one final point, of course. I will record, well, I am recording this webinar, and I'll try to put it up on the blog on our website by the end of tomorrow for you. So what I'll do is I'll just move straight over to the slides. So hopefully everything's operating there, and we'll get stuck into it. So, of course, any advice here is general only. We have to mention that bit first. Just very quickly, I think there's quite a few new people that aren't familiar with what we do and myself. So, a very quick background for those that don't know us. We're a small advisory firm. We do uniquely combine both fundamental and technical analysis. We manage clients' money for portfolios above 500 grand, but we also provide weekly research, which is, of course, very popular. The business has been around for 10 years now. We've been providing advice in the media for over 10 years. We have our own license with ASIC. So, we're not renting someone else's license. We're not part of a larger firm. So you can pretty much trust that we're independent, and you can trust our expertise. So let's highlight a few main points. So firstly, this is a chart that we recently put together. Basically, this is US ISM PMI. Now, this is very important because before we can try to figure out whether the share market's going to go up or down, we really need to understand where we are in the economic cycle. So, of course, the US economy being the largest is what we need to focus on. So the red line is ISM PMI. As we could see, it's at the lower part of the range if we exclude COVID and the GFC. It's pretty much as low as it's been, but not only is it low, it's starting to head higher. So we hear about PMIs and whether it's a bad number or not, but it's really the direction that counts. So as long as it's starting to head up from those lower parts of the range, then that's where you've got an economy expanding. The blue line is the ISM new orders less inventory. So essentially what that's telling us is, companies are ordering more. They're not just running down inventories. So there's really no signs of a recession. If someone says, if we get told the US has had a recession, well, that would be in the past. But at the moment, there's no evidence, and we need to look at data and evidence. There's no evidence that a recession, from what we could see now, is ahead of us. And even just several hours ago, Janet Yellen was on CNBC, also describing the US economy as heading forwards. It's not going backwards, and that inflation was coming down. So speaking of inflation, let's see what it's doing over in the US. So clearly, inflation is on the way down. We've got headline inflation in the blue line, core inflation in the red line. Core inflation is what the US Fed is looking at. It's heading down. It has the odd month where it's a little bit higher than the prior month, but again, the trend is important. It's heading down, and that's our main focus. So, look, there has been a bit of chatter recently about high oil prices. Obviously, oil's moved up in the short term. I was looking at some interesting analysis from Morgan Stanley just a few days ago. They were basically, highlighting that these short-term moves in oil don't really have an effect on core inflation, and that's what the Federal Reserve is looking at. So they'll look through that. Potentially there's an increase in core inflation by 0.05% because of higher oil prices over time. I think that's just a bit of a red herring. I think that, again, the inflationary trends are pretty clear. They're heading lower, and that's the main thing. The other point that, I guess the other topic that's getting spoken about a lot at the moment are the US yields, or even yields locally. So we have to remember the inverse relationship between bond yields and bond prices. So when bonds get sold off, yields go up. But we have to remember that bonds are generally, that sort of safe haven place to park your money. So if they're being sold, it's because that money then needs to go into a riskier asset, which is often equities, of course. But at the moment, the focus is on what the yields are doing. Look, as we could see on the 2-year notes, basically across all timeframes, bond yields are hitting a bit of a ceiling and threatening to break out, especially when we look at the 2-year note on the left. It is looking like it wants to break higher. We've got a US Federal Reserve meeting this week, so we'll know Thursday morning whether rates are on hold, and we'll know what the commentary is associated with that. I wouldn't be surprised to see those yields spike higher from here. However, let's be open-minded, because often what happens when you get these sorts of breaks is they can often be a false break, which means you sort of suck everyone into one direction only for it to fail and head back down. I'm not predicting that will happen, but just keep an eye out for something like that. So what I mean by that is you see a spike in 2-year yields in the next few days, but before long they fall back and there's a 4 in front of the yield instead of a 5. And that would be a very clear failure of yields to head higher, and that would be actually quite exciting for the share market. So I'm not predicting that could happen, but I think it's worth just trying to be aware of possible scenarios so you're prepared for it. If you see something like that, that will be a big buying opportunity. So in terms of opportunities at the moment, I think this year has been a good lesson in observing the extreme views and then doing the opposite. So the extreme view at the start of the year, technology would be in trouble. The NASDAQ has rallied quite strongly. Retail stocks in trouble in June, they've rallied quite strongly. In the middle of August, as we could see, plenty of headlines about problems in China. That was the extreme view. And of course, because of the Chinese economy not firing up too quickly in the first half of this year, it was of course leading people to question whether they should hold resource stocks, which we think are a good place to be. So these headlines are in mid-August. Let's have a look at the materials sector index. And what I've circled there in August is when we saw those headlines. And guess what? That was the low. So yeah, I think the view on China is quite extreme at the moment. So I'd be looking for a swing back the other way. And we're already starting to see that in the stocks. So the smart money is already moving into the materials sector. And I've spoken about this previously, but I still think it's very important. So this is basically a chart showing capital expenditure in the commodity space. Essentially, the point I want to make is the far right-hand side, which is where we are now, and it's showing very low levels of capital expenditure in the resources sector. So this is important because we've got an economy that's starting to grow. The Chinese economy will grow from these lower levels, and we're starting to see stimulus and that economy picking up. So what you'll have is increased demand for commodities right at the time where you've had record low investment in commodities. So I think we've got some very exciting times ahead of us when it comes to trading our resource stocks. So if we have a look on this chart back in 2003, we could see there was a low point, the prior low point for commodity capex, and you'll recall that some of our resource, or a lot of our resource stocks did extremely well. So I'm very optimistic over the next couple of years, and I think the resources sector is the one to focus on. So just in terms of a few trades, I think the market's been range bound. That does provide some opportunities. I think IGO has been a great opportunity, I know, for us in terms of on the management side. So we've had a couple of buy signals with IGO back on the 4th of April. And this is a little extract from the Dynamic Investor as well as the 22nd of August. And basically, this is how IGO's traded. So we had the buy alert in April. It rallied hard, broke the downtrend. That was the sell signal. Buy again in August. It ran too hard into September. So that's another one we've sold out of. But keep an eye on IGO because, again, I think it'll provide another one of these really good trading opportunities. You're looking at sort of 15% style moves. So I think if we see IGO closer to 1250 over the next week, that's your next buying opportunity. A couple of other sort of more recent trades, so stuff that's still worth a buy right now and worth holding. In our report last week, we've had Incitec pivot. So it looked like an inverse head and shoulders. So it's formed a low there and it's breaking higher. So that's a buy. And the other one's Fortescue. So again, resources bouncing off the bottom of the range. This year, everyone's thrown everything at Fortescue. So we've had staff leaving. We've had a falling iron ore price. It is bouncing now. Problem for China, of course. All the analysts have $16 targets on Fortescue. You can't push it lower. So you could have bought Fortescue at the top of the range there at $23. And even with your 2 dividends, you still break even despite all the doom and gloom. So it's like that inflated beach ball, you're holding it under the water. As soon as you remove that pressure, and at the moment we're talking all the bearish pressure, it'll pop right up. So I'm still quite excited about what that stock can do over the next 12 months. In the energy space, so I think short term it's maybe looking a little bit overdone, but I still think those prices will remain elevated for a period of time. We've had some trades in Beach Energy. So we had another, for my clients, we did sort of get in and out of that one and we're sort of back into it. But if that one is not everyone's cup of tea, another stock that we had in the report just a couple of weeks ago, and I think buying, at good buying levels right now is Karoon Energy on the right-hand side there. So a very long-term resistance level near sort of 240 was just recently broken. So you'll get a multi-month rally out of this. I think it's still only trading in the 250s, so it hasn't really moved much at all, but I really like the look of that chart. In terms of the broader market, again, pretty much range bound, the 2 horizontal lines, as we could see, give or take a few outliers, very range bound, very difficult, but the range is starting to tighten up. So I think we're getting closer and closer to an eventual breakout of this range, and then we could start trending again. And ultimately, longer term, this is a weekly chart, resistance up near 7,600. We're spending a bit of time up near that 7,600 mark. And the more we do that, the more we test it, the more we weaken it, the higher chance that we break through and we're into the 8,000. So it does sound like I'm very bullish. The next few days, look, anything can happen with the FOMC meeting. how the market reacts. But I think things are shaping up for a very good 12 months. And before we move on to the Q&A, I just thought I'd just put a little offer in there for those that aren't getting the research. Happy to give you a bit of an extra discount there off those prices you see on the screen. Just use the coupon code webinar23, all in uppercase. For the next 48 hours, you can get some extra discounts. If I mentioned all that too quickly, just send me an email tomorrow and I'll help you out with that. But we'll move on to the Q&A. So I'll just pull up the charts. Okay, so first stock we have is PLS. So it looks like we've got almost 15 minutes of this, so hopefully everyone gets a chance to mention a stock. PLS, I think first things worth doing is just moving to the weekly chart. We can see things a lot clearer that way. There's still a trend there. To me, this looks like one big consolidation, and potentially you could be getting an inverse head and shoulders here. I mean, we need to see a crack of this neckline, but look, short term it's looking weak, but again, just put in perspective, I think longer term this still looks very good. Duratec, so we've got a very lovely uptrend on that one. We move to the daily chart. Look, it is starting to break down here. Some good bounces off the lows, but it's not really making much headway. So I suppose I'd be a bit neutral on this one. When we look at the daily chart, I'd like to see a stronger weekly close. Up here would make me a little bit more interested in that. I've got a question on FMG. I've covered that already. Let's look at Lovisa. Got some old lines here. Let's not worry about those too much, but look, obviously very messy coming out to this chart. Obviously dominated by this sell-off here on volume. And it does look like it's rolling over again. So I don't really see anything yet to get me excited on this one. I'd need to see more evidence. It's finding some support. I've got a question here just generally on banks, ANZ, NAB and Westpac. Look, longer term, I prefer CBA if I had to pick a big four bank. These other ones, let's put it in perspective. This is a monthly chart. This is ANZ where it peaked. So it peaked 8 years ago, and there's a very clear trend lower. Westpac, NAB, just not going anywhere. So look, I think coming into reporting season, the next dividend, I think it might coincide with the next sort of uptick in the market. But short term, they're showing a bit of upside. But I guess another point worth looking at is the XFJ, which is the financials index. Now, I've noticed over the past year that tends to turn around when the RSI gets quite toppy. So just keep an eye on that. I think next time you see it come up to these levels, you might get the next potential opportunity to get out. I think last time we looked at that in the Dynamic Investor Report was around here in July. And as we could see, we got that sort of downturn in the XFJ. Another question on Perseus. So I think gold stocks are looking pretty good here. We've got, in this case, a couple of higher highs and higher lows. So, nothing really wrong with the way that's trading. I think this one can continue heading higher. We've got Min. I quite like Min. So what I'm seeing here is I like it when we get these horizontal boundaries. It makes it a little bit easier to trade. If I just zoom out a bit, we'll notice that this sort of bounce occurred near these prior peaks, which is interesting. But the other thing is we had this very clear sideways range, a breakdown under the range, only for it to rip back up and go back in there. So to me, it looks like we've got a very good low in place. And then the next buy signal is the crack of 75. So overall, I'd be happy to hold that one. Okay, we've got NWH. It was pretty much doing okay up until this sort of sell-off here. It's found support at the right levels. But I just wonder if you're going to get, so just by eye, it looks like there's potentially a trend line. I just wonder if it's going to get close to that trend line and sell off. So yeah, we just need to really see what it can do over the next few days. Okay, AX1. I looked at this one recently, which is why I've got a line here. It had an upside break and it did pretty well, but now we've got it coming back to test the breakout. So yeah, we just really need to see how it reacts around these levels. I'd say a break of 180 would be a negative. And I guess maybe a move above 2 would be your next buy signal. Okay, Gentrack. All right, well, this looks interesting. I don't follow it, but to me, it looks like, is there a takeover here? Just the way it's jumped up and hasn't moved. But again, if I assume that there isn't a takeover in play, you've got a clear sort of horizontal trading range. And to me, it'll just be a case of, break down there as a negative or break up there as a positive. Okay, Biz Alloy. Yeah, pretty volatile. That's the weekly, coming back to the daily. Yeah, obviously all of this isn't a good look. So it seems to have run pretty hard and rejected, and then it's fallen. So yeah, obviously that looks very dangerous. I mean, you could be, if you're buying it here, where are your stops, your targets? Just the risk reward won't be that great anymore. Okay, WHE. Does it exist? No, someone's made a typo. I'm assuming they're talking WHC. Again, to me, this looks like an inverse head and shoulders. So I think a low's in place and basically a break of 750 should then see it back up to the 9s. Megaport. So if we go to the weekly chart, we could see, yeah, hasn't done very well at all. Looks like it's hitting resistance at potentially around these sorts of levels. Yeah, that's not a good move there. So basically, although you've got a trend, we had this tightening range, and instead of breaking to the upside, it broke to the downside. And then what I find very interesting with big candles or bars like this is over the next few days, if it's trading within that bar, is it in the bottom half or the lower half? So you've got all this price action in the lower half of this candle, which to me is saying more likely it's going to roll over. So yeah, that's where I think that one will go. Soul Pats. So obviously very interesting. We've had this sort of break here, only to head all the way back down to old support. Yeah, that's not the way you want to see it, test support. So I'd be very wary of that. I'd be running a very tight stop. Okay, let's have a look. Okay, S32. Obviously, we've got this downtrend here, but what's becoming interesting is we've got that low from July last year. It's just breaking under that, but it looks like it wants to rally back above it. So, yeah, look, potentially you might be getting a reversal here. So, I think if you're seeing it sort of closing, even let's call it 350, then you could have a reversal. So, probably worth keeping an eye on. The RSI is showing a bit of divergence as well. So, a little double bottom in that. So potentially shaping up for a recovery here. Okay, we've got CSL. Yeah, obviously not doing much. Yeah, in the short term, I think that's a low, but we've just got this range. It's bouncing off the lower part of the range. It really needs to get out of that. Otherwise, it's just like the broader market just banging around. So nothing new to add on that one, unfortunately. Okay, and this is Reese. So it looks like it's starting to break down now. We've got a lower high, lower low, decent sell-off here, bit of volume as well. So it looks like this runs over. Let's just go through the list. So we've got, LIC. And let's go to a weekly. Is that telling me anything? Only that it really seems to be struggling here. We're looking at this, we're getting a lower high. It's obviously made a lower low there, so it could be rolling over. It's not massively clear on this chart, but I'll just be a bit wary of this one. AZS. That looks great. Yeah, look, obviously massive run, and we've just got a consolidation here. So price rejection there, but I think as long as it holds above that, it's okay. Again, we've just got, it helps when you've got horizontal boundaries like this. That helps tell you what you should do. Sell it under here, and upside break is the next buy. Red 5. Obviously big volume there on the jump up. Not getting through resistance though. So vulnerable to some profit taking unless it can get back up there. Alrighty, we'll just do this for a couple of more minutes and then we'll wrap up. AFG, so dominated by this big sell-off, trying to bounce, not able to go anywhere at best. It can go sideways, but most likely it's got downside risk. CXO, can't add anything positive on that. I'm sorry, it's just clearly heading lower, and nothing here saying that it's found a base yet. CWP, Cedar Woods, so a trend that's also now dominated by a massive sell-off. A lot of closing on the lows. So again, you might get the odd bounce, but I think the risk is to the downside. All right, I'll do 3 more. Nanosonics. Yeah, look, very messy, isn't it? So trying to recover here, but sharp sell-off, trying to make some headway, but not really, and then just breaking down again. So this is the daily chart. Yeah, to me, it looks like it's going to edge up to 450 and get sold off. We've got car sales. So I've looked at this one previously. I've got a line here. Must have done it in one of the videos. Yeah, just look upside break, retest, rally. Look, that does look quite extended. So, that's the weekly chart. Yeah, run a very tight stop on that one. Yeah, it might be getting towards the end of its run. All right, and last one, BOE. Yeah, I've got a line here as well. We looked at this one a few months ago. What I really liked about this was, again, we just had this sort of horizontal trading range. So clearly, as soon as it broke above it, that was your buy. And now we've got this massive move. So I looked at some of these uranium stocks several weeks ago. The Dynamic Investor Report, BOE, Deep Yellow. What was the other one? Bannerman. Yeah, so these very large. So when you have resistance levels formed over a very large period of time, the moves can be explosive. So that's why when I was mentioning that chart of Karoon before, KAR, potentially it could do something similar to that. So still early days on that one. Okay, well that's all for today's webinar. Apologies for those if I couldn't get to your stocks, but look, I still have the weekly video, your stock requests, so send them through. I'll put up, as I said, I'll put up a copy of the webinar online so you can have a look at it again. For those who want to take up the research, that discount code in uppercase was webinar 23. But if there's anything else we can help you with, just let me know. And enjoy the rest of your evening. Thank you.